G'day folks, welcome back to Pete's Investing. It's the 18th of July 2024. We've got silver, gold, US dollar and Bitcoin in today's update. As you can see there, silver and the US dollar have dropped since our last update and gold and Bitcoin have risen. Don't forget to hit that like and subscribe button, that notification bell, and support us more on Patreon where we do some weekly scans of bullish shares. Here's our heat map, which we update every day. And you can see there in the left chart here, gold is predominantly bullish across all timeframes, monthly, weekly and daily, and this is based on the CCI 150 indicator with the trends. Silver is predominantly bearish on the weekly and daily. US dollar is also bearish on the weekly and daily, and Bitcoin is predominantly bearish on the monthly and weekly, still bullish on the daily, plus some other instruments for your reference should you wish to look into those. In terms of trading, we do look at trading with the higher time frame. So if you're trading on the daily time frame, trade in the direction of the weekly. If you're trading on the intraday, like the 1 hour, trade in the direction of the daily time frame. Enter a trade, wait for a fresh breakout from the CCI 150 moving averages, and that video on those moving averages is in the link below should you wish to view that. And also to close a trade, we look at closing it when the CCI 150 breaks into the moving averages or when the price breaks into its respective moving averages. So first looking at gold, we've got the monthly here. You can see it's broken above the moving averages of the CCI. But notice also we still have a bearish divergence, lower highs on the CCI and the monthly, and that's been happening over the last few years versus new highs going on the price chart. On the weekly, we've also got a bearish divergence here. We had it happen back there versus high highs, and the price broke down, hit our target area. And for those new to the channel, we always draw a Fibonacci from the recent low to where that latest high was. And that would have been between a 23 and a 38% level. So that hit it, and it sometimes goes a lot further to the downside, but that's a minimum level we can expect, and it works about 90% of the time. So in this case, it did hit that area, and then it bounced from there, making new highs. Notice the CCIs in the mid-range of the moving averages, so somewhat of a bullish to a neutral positioning on the weekly. On the daily, it's bullish. It's broke above the moving average band. Now notice here, it's actually breached this 2450 resistance we had drawn previously, and we're going to move that. So our new resistance, key resistance, is going to be at that level there at 2483, and it's actually bounced down from there, and we expect some level of potential retrace from that point as well, although there's no divergence. Now we did have a divergence here, and that was amplified by the weekly as well. These don't always line up, but in this case the daily lined up with the weekly divergence. Going to the hourly chart, we always use the daily as a reference when trading on the intraday time frame. Here we're using the hourly as an example. So you would have taken, you can see that the daily is bullish above the CCI. So you would have taken long trades from about the 4th of July there, and that's indicated by by these blue arrows. So when the price breaks above the moving average band on the CCI, you take a long entry. Now what I've drawn here is a Fibonacci, because we've also got another bearish divergence here on the 1 hour charts. And I've drawn here a target area between a 23 and a 38% level. So at this point, careful about going long until we see this. Now this could have actually, theoretically, could have actually hit the target area. So if the target's 2451, and that arrow hit a low of 2451. So theoretically, it's actually executed, but we might see further downside. You can see the CCI is still dropping, making no massive sign of a move to the upside, although it is moving slowly, but nothing too dramatic, so it could actually fall a lot further. Silver has got a similar story. It's got broken to the upside on the CCI 150 on the monthly, giving us a bullish trend. On the weekly, it's actually broken below that moving average band, and the moving average band is starting to thin out, giving us a bearish signal. And on the daily, it's also likewise bearish to the downside. Again, we had another bearish divergence here between those peaks on the CCI and those peaks on the price. Hit our target. You can see there smack at the bottom of that 38% level, and it made a bit of a retrace to the upside. But notice the CCI is still dropping off, again giving us a bearish signal, so we might see further downside. I've also drawn this, if I zoom out, I've also drawn this diagonal ascending trend line, and it's been bouncing off that for some time, and in this case it's actually respected that again. It's actually bounced off that as well. So we always respect those trend lines and support areas. If we go to the 1 hour chart, again using the daily as a reference, taking short entries only. From there, in this case, the you would have taken the short entries where the red arrows indicate going short. But notice, because of that very narrow CCI band and the narrowing of the CCI band here on the 1 hour chart as well, that's a very sort of sideways movement and consolidation. So very carefully you would go along. I'd like to see this sort of movement where the price band breaks in a more wider range. So again, just be careful of that. Now, there is no divergence to talk of at the moment. The CCI is moving in line with the price, so there's no divergence on the 1 hour chart. We did have a bearish divergence here versus high highs on the price back there, and it's actually fallen off as well. So for the US dollar, it's bullish on the monthly, although notice the CCI band is very narrow. Likewise, on the weekly, it's a very narrow strip of the CCI moving averages, but nonetheless, it's actually broken below, so it's a bearish signal. And on the daily, it's been falling for a number of days now, and that's also bearish. And it's actually broken through this previous minus support at 10,340, and there's no sign yet of another support level, with the exception of this lower level down here at 10,197. But so far, there's no other sign of a retrace. There is no sign of a divergence, so we may see a further drop in the US dollar. Going to the 1 hour chart, again going short only from that point there on the 30th of June, and going back to the 30th of June, about from this point. So that would have been a nice little trade to take. Now in this case, this is where I use divergence. I don't trade divergence, but I use divergence to potentially exit and take profits. Now, you could actually use the price below the moving average band of the price chart to exit the trade, and you would have exited at that point, or probably at that point there when it broke into the moving average band. Or again, taking heed of the divergence, you would have taken some profits in that little range there. So it can be used either way, but again, always pay attention to these divergences for a potential exit. Lastly, for Bitcoin, on the monthly, it's actually broken into that moving average range on the CCI, so giving us a somewhat neutral to bearish signal. On the weekly, likewise, it's been bearish for a number of weeks now. It's broken below the moving average band of the price chart as well. And on the daily, it's been in a bit of a free fall for a number of days. Broke through this previous minor support at 60,219, and then eventually bounced off this 56,566 for a number of times before bouncing to the upside. Now in this case, it's actually broken higher past this
sell at market executed
3846. So at the moment, it's bullish on the daily. And if we go to the 1 hour chart, using the daily as a reference, going long from around the 13th, 14th of July, which is around this area here, you would have taken long entries indicated by these blue arrows, and you would have possibly closed them out, as I said, when it breaks into the moving average of the CCI, or if you want to follow the price, and you've got to follow it pretty closely when it touches the moving average of the price band. Now in this case, you would have closed it out once there, re-entered it, and closed it out again there. In this case, another little entry would have been made there, a few pips made. At the moment, now you'll notice there as well, if I zoom in, we did have a higher highs on the price versus, actually that was started there. That's actually gone as a bearish divergence there, and that trend line should have gone back to that point there. So you can see there lower highs on the CCI versus higher highs on the price. So yes, you could have traded these going long, but again, once you start seeing this divergence happening, just be very cautious, and you have to watch it carefully. Wait for a sign where it actually might start breaking down. In this case, I would have taken the break below on the price chart, and you would have taken the first exit there. Now that would have been a risky trade to take that little position there, but notice how small the move was, and that's a result of this bearish divergence, and the price has started to retrace from that point there. Now if I was to draw a target area on this one, take it back to that recent low, to that high, assuming it keeps falling from here, of course. You can see there that 23% is right on that resistance line. That'll be the new retrace target area. Now, it could actually fall a lot further than that, or it could actually bounce, maybe just touch that or break into it, then bounce from there. So we'll see what happens in the coming days. So if you got value out of the video, hit that like and subscribe button, hit that notification bell, support us more on the Patreon page where we look at weekly scans of bullish shares. Thanks for watching, and see you in a future video.